So I hope everybody's having a good weekend. I'm making this video just to kind of go over and talk about Wednesday's price action for the previous week. So let me start with the daily chart. I wrote here the price didn't do much at all. There was a huge daily candle on Tuesday, but that we've stopped shy of the buy side liquidity here that high. And this is also Monday and Tuesday because Monday was a holiday. So some of Monday's price action was basically included into the Tuesday daily candle. But that huge expansion, right? Kind of like compare it to the previous days. This is obviously a large move, and that kind of led to a little bit of a less excited price action the next day, which is normal. To expect to see after very large ranges. But anyway, there's also a lot of news in the afternoon. So there was FOMC minutes and also earnings. I don't know which earnings for which company, but there was huge earnings that came out after 1600, so when the market closes. And so you can see most of the movement for the day, most of the day's range was formed from this low and then near the high in just a single hour, right? So definitely, you know, one of those days that doesn't happen very often. But I'm going to take a look at it a little bit more, and I'm really just going to focus on the earnings price action here. I'm still going to talk about the 9:30 opening, but when you see this much volatility, usually there is no trade near the end of the day or after the market closes. When there's this much volatility, there's always bound to be something you can take. But anyways, before I continue with the earnings trading, I will just say that the morning still moved fairly well. There was no entry though, and it would have been against my news to enter anyway with my live model because there's FOMC news in the afternoon. There's no high impact news in the morning, so I don't trade. But there was still, my model was like the framework for my model was still there. So looking at the 5 minute chart, you have this short term high, and now note how this short term high go from high to low. It's very far away from where the actual high was formed. So this wouldn't have been like I know this isn't as favorable when things like this happen. When the high is made very far away from the breaker, it's almost never as favorable. And then we had a very fast price action, but as soon as we got down beneath that low, we just kind of started moving sideways, and that's not. We didn't go down to any further low in a very long time, and that's not very favorable as for the type of trades I look for my trading style. I really don't like to be sitting in this sideways price action, but I don't think anyone really does. At the end of the day, it is what it is. So let me continue. Um, yeah, and then I don't go down to the 1 minute chart actually because even though we had that 5 minute short term high and we're in a premium, my model would then require me to go down to the 1 minute chart and look for an entry with either a market shift or an inverse fair value gap, and there was simply no fair value gap that was traded back into on the 1 minute. So there would just, even if I had been able to trade, there would have been no entry. Anyway, so it was a 5 minute short term low taken out in a big discount during the news release, and that would incline me to go look for an entry. So look, the market closes here. We start to make an initial run higher, and then news comes out, and very quickly we dip below this low, and we start to, well, absolutely run higher with lots of excitement towards the high of the day, or well, towards the high of the day, not quite above it. This is a 5 second chart. Now this trade isn't drawn properly, and this would have been the 1 minute chart. You see how quickly we dip beneath this low. The first fair value gap would have been all the way up here. So because of the volatility, I actually felt it was appropriate to go down to lower time frames. I'm using the 5 second chart, and then you can see the fair value gap right there, something that could have been taken. Now obviously I'm not saying this is technically my model, except it's not within the right time, so I wouldn't be taking these trades. But technically, I mean, it is the model, I guess. If I were to go sub 1 minute and look for fair value gaps sub 1 minute, if the 1 minute doesn't have any, because it doesn't make sense, it is very volatile. There's none there. And then yeah, technically this trade would I have taken this trade if I had been on the chart at this time live and access to the seconds chart? I don't think so. I don't know, to be honest. I mean, it is pretty quick. This fair value gap forms within 10 seconds, and I need 10 seconds to make a decision. That is, and then once I see it inverse here, that's even worse. I mean, it might only be 20 seconds of drawdown, give or take, maybe 15 seconds. But it's still, you know, it will still. I don't know how it would feel, to be honest. This is very, very quick price action. So that's all I really want to talk about for Wednesday. Um, yeah.